Thank you to everyone who's signed up already, signed in, ready to go. Welcome to another CreditorWatch webinar. We're running these almost monthly at the moment, which is great. So today's topic is looking at market insights, specifically our small business risk review that we run on a quarterly basis. So this will be looking back at Q3 for 2017. My name's Patrick Coughlin and I'm the Managing Director at CreditorWatch. So just a quick few housekeeping things. Q&A, we've got the ability to answer questions throughout this webinar, so please feel free to ask any questions along the way. We've got a few staff standing by to help out. If they're a little bit more technical or require potentially a phone call or an email, we'll let you know and we'll get back to you in the next sort of 24 hours with a response to that. And also we are recording the webinar. So we'll provide that recording and the slides, the presentation itself to you, probably within the next 24 hours as well. So if you have to duck off early or you want to share it with any of your friends and colleagues, you'll be able to do that. Quick little agenda. For those of you who've joined us before, we run a fairly tight ship and keep it fairly consistent. So a little bit about CreditorWatch. We'll look at exactly what sort of goes into the small business risk review and how we put it together on a quarterly basis. We'll obviously then get into the results, specifically looking at payment default trends, state by state breakdown of court actions and the values of those actions. And we'll also look at the failure rate of unincorporated entities. So when I say an unincorporated entity, I mean a sole trader, trust, or partnership. We also ran a survey not long ago, so we've got a few results from that as well. And as always, there'll be a couple of polls along the way. So a little bit about CreditorWatch. We're Australia's leading commercial credit reporting bureau with over 50,000 customers and growing. We've got a wide range of products from credit reports, credit scoring, customer alerts, monitoring, debt collection tools. In terms of customer onboarding, we can actually replicate your current paper-based credit application, make it available online with a fully branded online credit application. And that actually integrates with CreditorWatch, includes decisioning. So you could be bringing on, 10 customers a month. You could be bringing on 10,000 customers a month. We've got a solution that can help you out with that. So please have a click on there if you are interested in that. We can also do quite a bit of data washing, customer updating as well. For the smaller businesses out there, they make up the vast majority of our customers. We certainly do act as a virtual accounts receivable manager. A lot of them, won't have anyone dedicated to AR, or that, they might have a small resource that works a couple of days. CreditorWatch is certainly, a solution that can fill that void. If you are using Xero or MYOB, a cloud accounting tool, we actually integrate directly into that to help automate it even further. And for those bigger businesses, bigger companies out there, we can actually provide you with API integration. So imagine being able to pull, online applications, all the data from an applicant, or credit reports and alerts on your customers straight into your ERP or CRM system, be it SAP, Oracle, Salesforce, really anything out there, we can integrate straight into that. So a little bit about the small business risk review. It is a quarterly analysis of a variety of data that we're aggregating together. That data is coming from a combination of third parties, publicly available registers like ASIC and the Australian Business Register, trade payment information submitted by our customers, and then obviously the ones that we've got noted down there, courts around Australia, the Insolvency Notices Register, which is run by ASIC, debt collection inquiries. So we've got over 200 debt collectors out there that use us for their searching requirements. And then of course, our 50,000 plus customers leave plenty of data with us in the form of, trade payment information, payment defaults, inquiries, etc. So when you do get this presentation in the next day or so, you can click on that link at the bottom there, download Q3 2017 risk review, and that'll take you straight through to the actual risk review, which I can give you a really quick look at now. obviously without spoiling the information that I'm going to go through. So it's a really handy thing to have, and you can always look back on it. So a quick poll that I want to run just to get an understanding of, I guess, how you guys have experienced the last 3 months compared to really the rest of the year. So just asking here, in the last 3 months, has your bad and doubtful debt levels increased, decreased, or remained the same? Or there's the I don't know option as well. So please, let us know how you have, how you have found it. It's always interesting to get a bit of a poll and better understand, those people who have signed up for this particular webinar. The media's been, I don't know, fairly bearish recently, and I think particularly more so on, the housing market in particular. So it'd be good to get a better understanding of how you guys are seeing it out there in that trade credit space. Give it another couple of seconds and we'll close that poll down. So jump in and vote if you haven't already. Okay, we've got 51% remain the same, and then we've got 21% decrease, 14% increase. So a bit of a spread there. Few of you unsure, which is fine. So no real deafening trend there, but at least it gives me a better idea of, how everyone is experiencing the market at the moment. It's probably something the next question would be to ask, what sort of industries you're in. Plenty of, collapses obviously in the manufacturing and the construction building industries at the moment. So that would probably give us a bit more insight going forward. Jumping back into the presentation. So the first thing I wanted to look at is payment default information. Now, for those of you who are customers and for those of you who aren't customers, our customers can register payment defaults against debtors that owe the money or haven't paid or are, significantly overdue, 60 days or more overdue. What we've seen is a bit of a decrease when we compare it to the third quarter of 2016. So we're looking at 57%, and we're looking at the value there. Obviously, a growing business like ourselves, looking at the volume sometimes throws the statistics out a bit as we bring on so many new customers. However, we still like to give an idea of the average payment default size when we're comparing it to the previous quarter. Now, payment defaults are really interesting with CreditorWatch. The vast majority of our customers, as I said, fill that small and medium business space. And what we find is they are the first businesses or the first suppliers that are going to be defaulted on when a debtor is heading towards administration or is starting to really struggle. Small and medium businesses tend to be non-critical suppliers. They tend to be, one of many in their industry. So it's easy for that particular dodgy debtor to supply a hop and move around, rack up debt for a few months, then move on to the next supplier. And there's, until recently, not been a great way of communicating that a debtor is doing that. CreditorWatch is trying to fill that void. As a result of that, we see that defaults being registered with us often are precursors to future critical risk events of a debtor heading to administration. And you can see if we looked back at Q3 2016, Q4, there were significant increases on that 2015. And at the time, I'm obviously doing these webinars on a quarterly basis. We actually flagged that those increases were most likely an early warning. We looked quite closely at the data, an early warning that we expected to see an increase in ultimately court actions, because that's the logical next step as the defaults grow in size and as they progress through the debt collection process. Court actions are usually the next step, as the more critical suppliers tend to be your larger organizations out there with dedicated resources and generally bigger credit limits being exposed to. They tend to take court action pretty quickly as well. So we're actually you'll see in a second as we start to go through the court action stats, you'll see that big increase in Q3 2016 and Q4 was actually a precursor to an increase in court actions. And I think ultimately what we're going to see is some additional business failures than what we've previously been accustomed to. And we know that the ATO has obviously been very aggressive out there in winding companies up. So let's have a look at those court actions. So Victoria have remained fairly consistent. This year has been, a big year for court actions, both in the value and the number, and we've seen that that's continued right through from Q4 last year. Looking at Queensland, there's been a really sharp rise in both the value and frequency of those court actions. So they had been cruising along quite nicely. I think the state started to get its act together off the back of a downturn in their sort of resources boom, and we had seen a drop consistently for almost a full year there, but we've seen a significant jump in Q3. So for any businesses obviously with exposure to debtors in Queensland, definitely something for you to note and keep an eye on them, a closer eye than obviously you usually would. New South Wales, similar sort of story, fairly consistent increases. However, this time round, only the dollar amount has increased, and we've actually seen a decrease in the number of actions that have taken place, which is nice to see for anyone that is operating in New South Wales or with exposure to those New South Wales businesses. I just want to touch on, before I run this poll, I'll just jump back to that previous slide. The ATO is obviously in the process of releasing what they're calling tax default information. There was, talk of that ultimately happening in July this year. It has been pushed back. The latest information we have is hopefully early 2018. They will start releasing that information to CreditorWatch. Colin Porter, our CEO, has been has been leading the push from, I guess, the company sector to get that information released, because far too often we see companies with very clean credit files all of a sudden get wound up or go into administration, and the biggest exposure is always the ATO. So it's nice to see that they will be helping out to expose those companies out there who are either racking up debt maliciously or are really struggling just from a cash flow point of view. Hopefully having that information within the Bureau in early 2018, as I said. So next poll we have here: what portion of your customer base is made up of unincorporated entities? So unincorporated entities being sole traders, trusts and partnerships. It's obviously not a lot of information available out there on those types of entities. However, CreditorWatch does give you the ability to run credit reports on them, as well as access scores and see any adverse that may be lodged against them. And we're quickly gathering trade payment information on these types of entities as well. One of the features that we do have, if you are using the trade program that CreditorWatch has called Debtor Logic or Debtor Logic Plus, is you are able to get a better understanding of not just how many of these types of entities that you're dealing with, but you can start to see exactly how they're paying you and also how they're paying the market. So for credit managers, there's often a bit of a divide between sales and credit. It's a really good way to show factual information or statistical information to say, hey, we need to be focusing on dealing with proprietary limited entities more so than obviously sole traders and partnerships. And if you are dealing with trusts, you should be looking to deal with actually the trustee of that particular trust. So I'll just close the poll here. So looking at some of the results, so 41% less than 10% exposure to unincorporated entities, and then we've got pretty much the balance above that, obviously. So not huge exposures to those types of entities, which is good because they tend to represent a higher risk than a proprietary limited company. There's obviously then limited recourse as well, particularly if you're dealing with, the trust only. So thank you for that. So let's have a look at some of the results of failing unincorporated entities. So it's a part of the market that's often forgotten about or not really reported on. ASIC obviously release plenty of information about administrations and winding up and insolvencies. Plenty of other economics reports look at companies, but more often than not, unincorporated entities are a bit of a forgotten about portion of the market, despite the fact that they make up such a huge part of the economy as well. So we had seen the last time round a drop in the number of failed unincorporated entities. However, again, we've seen an increase for Q3 2017, 23% increase versus 2016. And if we look back at 2016, there was actually an increase at that stage as well of 20%. So we're seeing, year-on-year growth of failing unincorporated entities, particularly for Q3. So again, something to keep in mind. Doing data washing is a great way to understand exactly what type of entity that you're dealing with. Often we see, businesses get sold. More often than not, the previous owners or proprietors don't communicate that to their suppliers. The new owners, proprietors take over. Everything's trading fine. There's no need to, be concerned or, no red flags to suggest necessarily that a business has been sold. It's not until they, obviously slow down their payments or stop paying altogether that you as a supplier look into it and go, oh, great, I've actually been trading with the incorrect entity. Those individuals are no longer running the business that I might have had, guarantees with, or, my credit application, is with that now cancelled entity. It makes it very difficult when you have to take that next step around going legal potentially or trying to collect outstanding debt. So just one other thing to keep in mind. So we ran a CreditorWatch customer survey not long ago. Some of these results we shared with you in the last webinar, but we wanted to run them by again because we've got plenty of new people who've signed up this time round. So a few things that jumped out at us. Nearly 1 in 2 Australian businesses are leaving themselves vulnerable to bad debt by not performing credit checks or monitoring their existing customers. So something that I've found since being involved with CreditorWatch from day one was that businesses are pretty good at doing some sort of check, even if it's a basic one, such as an ABN lookup to verify that the business is active, so to speak. However, what tends to let them down is there's no real accountability or monitoring put on the existing customer thereafter. So if they start to fail, start to rack up, defaults, court actions, or even go into administration after that initial credit report, there's often no way of finding out until the administrator sends a letter or gives you a call, or you turn up to the business and it's all closed down. So definitely something to keep in mind. That ongoing monitoring is extremely important, so you are receiving those proactive alerts that a company is starting to struggle. 72% of all respondents claimed they always reviewed a new customer's repayment ability, which is fantastic. Almost half, so 45%, said they never reviewed the ongoing payment behaviour of existing clientele. With all the technologies that are out there, particularly with the online accounting systems like Xero and MYOB, there's some fantastic add-ons and even organic features within those platforms to better monitor the ongoing payment behaviour of existing clientele. It's something to, deteriorating payment behaviour is a real key indicator that someone's starting to struggle or is going to struggle in the near future. So particularly for those smaller businesses out there that have signed up to the webinar today, something to keep in mind. Generally, larger organisations have, CFOs, financial managers, dedicated credit managers, credit teams, etc., and they often pick up those slowing payment trends. Those smaller businesses, though, they're often run off their feet trying to run the business day to day to spend too much time looking at that. And the last one is the majority of sole trader and micro businesses that are using us cited chasing payment obviously as a frustrating and uncomfortable experiences. SMEs were saying it was mostly time consuming, and no surprise, large corporates and enterprise sized organizations out there claimed it was an easy practice. Again, they've usually got a dedicated process in place, sometimes automated. For those smaller businesses and even the medium and some of the large businesses that don't have those automated processes in place, we're trying to make that debt collection process as easy as possible. We recently revamped our debt collection tools to provide you with more intuitive and customized payment template requests. So overdue letters, final notice, letter of demand, 30, 60-day reminders, that sort of thing. We actually pull a lot of the information from the bureau itself, pre-populate those letters for you. You can add in the amounts or the dates that they were due, and it produces a really nice PDF with your logo, your payment acceptance offers. So whether it's via credit card or EFT, etc., and it produces a nice PDF for you to send straight off to the client. So something to keep in mind next time you are in CreditorWatch. Jump into that debt collection tools tab that's at the top of your screen. The final thing that we've got here is payment trends. So a recent survey that we conducted found 86% of respondents felt more comfortable trading with a company from a risk perspective over a sole trader, partnership or trust. So probably nothing new for most of you out there, but it's always nice to see the numbers, set in stone, so to speak, after surveying quite a number of our customers. So that really wraps it up for today. I just wanted to jump online quickly and show you. Obviously, you'll be able to download this once we send through the presentation itself, or most of you probably already received an email from our diligent marketing team. Something else to keep in mind, we do have a blog on our website. We do release a decent number of articles and infographics through there, so I encourage you to jump on and have a look at that. Keep an eye out for updates to that. And just on that debt collection tools tab, for those of you who do have access to CreditorWatch, you'll see that the debt collection tools lives up here, and that trade program, Debtor Logic, is there as well for you who are interested. We've got a couple of upcoming webinars as well, already locked in for the 9th of November and the 22nd of November. So enhance your accounting packages with CreditorWatch. So anyone that's using Xero MYOB or considering moving to Xero MYOB, I would suggest you jump on, whether or not you're a customer of CreditorWatch. I'm going to take you through exactly how it works, how the integration works, and the additional benefits that you get from that. So for instance, every time you add a contact to your Xero account, for instance, we'll actually push a credit report direct to you. So you don't even have to log into CreditorWatch, or if you forget to log into CreditorWatch, for instance, you do get a credit report sent to you as a nice reminder. And then later on in November, better understand CreditorWatch credit reports. So that's me taking you through our credit reports, what to look for, and how you should be assessing them, and ultimately, what action you should be taking based on certain, events or risk factors that may be found on a credit report. So you can jump in and see those webinars, register for them by clicking on here. Alternatively, you'll be able to see the previous webinars that I've run as well. For those of you who are interested in a free trial or want to get a demo set up, please click on that top link there, and that will take you through to a form to fill out, and we'll be in contact with you. And lastly, please stand by. We're going to switch this off, and a quick survey will pop up, and that really assists us in improving our webinars in the future. We're going to look at doing some guest spots and also get some new CreditorWatch employees involved in the webinars. So for those of you who are regular listeners, probably sick of my voice and you're keen to hear someone else. So thanks again for joining us today, I hope I haven't taken up too much of your lunchtime, and have a fantastic week, or what's left of the week. Cheers.